Hi, I'm Kirsty Stevens here, partner at GRI Club, reporting from the Europe GRI. Great to have here Tal Lev Ari from CIM Group. Tal, it's great to welcome you.
Thank you.
Just wanted to get your perspectives. This year we launched the GRI 50-50 Women's Initiative. How do you feel about that in response to the current market and yourself being a senior female?
I think it's a great initiative. Anything that can encourage companies to have more of the women workforce to join this initiative, to come and be part of the conversation, I think is a really welcome initiative. The women's session that we had yesterday was also very informative. It's really great that we're using those sessions to actually discuss the industry and trends, in a very comfortable environment. So yes, I'm all for it, and definitely more should be done.
And I think you moderated a session yesterday. Can you tell me more about the current market sentiments, what the appetite is, any fears?
Definitely. I think we're all trying to unpick what are the reasons for the very low transaction volume that I've been seeing. Clearly there are multiple factors. The uncertainty around the rising interest costs and the cost of, and not only the cost of debt, but also the price discovery that is currently ongoing. It's been interesting to understand that there are still sources of capital to deploy both on the equity side and on the debt side, and it's really a bit of a waiting game, and the expectation is that as sponsors adapt to the higher interest rate environment, we're going to see a narrowing gap between the bid-ask and some more transaction activity. The favorable sectors will not be a surprise to anyone. They are around the logistics and around the hospitality, which are two sectors that we think have very strong fundamentals as well. And we are actively, trying to support sponsors with their new acquisitions or refinancing. There's been some discussion about the resi market and some potential correction in that sector, which again, I think in most jurisdictions we operate in, we see very strong supply-demand fundamentals, but it's really about the right valuations and for the sponsors to feel comfortable to jump into the water and start buying again.
Great.
So I think there is a lot of optimism for some renewed activity next year.
Anything keeping you awake at night?
I'm very fortunate to have a clean slate for Europe. So not really, thankfully. It's all about trying to find the right opportunities, and as the market starts sort of like regain some activity, just to be part of that.
Glad to have moved from the US market this year?
So the US market is different dynamics. I think the correction there has been much more swift. It's also influenced by other sort of like factors that are not necessarily applicable for Europe. I would say in terms of sector-wise, yes, the asset classes, the opportunities are in the same sectors, but they're coming from different directions. So while we look at what is happening to the US, because historically it has been a sign of what is to come, we're also looking at Europe as Europe on its own fundamentals, and we definitely think there are opportunities here, and we are committed to growing our platform in Europe.
Thank you
for having me.